Hello, everyone, and welcome to the Australian CFO Summit, Protecting Profits in 2023. We are absolutely thrilled to have you here to join us for today's session, which is a masterclass on how to perform the month-end close in less than a day. I am very excited to be joined by two of the main men from Beancounters. So we've got Tyler Caskey and we also have Daniel Fu, both partners at the Beancounters. Now, before we begin, I just want to give a huge shout out to our sponsors, McKay Goodwin, Huddled, My Accounts, Fathom, Easy Collect, Alana Bennett, EXL Cloud, F-Shore, and CFO Magazine. They have all done a huge amount of work behind the scenes to make today possible. So a huge thank you. Now, I won't take up more time, but I will just say I'd like to encourage everyone, let's just use the chat function, ask as many questions as possible. And I think the guys will do their best to answer them all as best as they can. So the session will be recorded and shared with you as well as any of the resources as well. So over to you, Tyler and Daniel.
Awesome. Thanks, Adriana. Much appreciated, and looking forward to this session. Daniel and I have been working together for the best part of 8 years as teammates when working at AGL and in the reporting and treasury team. And then also recently, we've joined forces to become partners at the Beancounters, which has been up and running for about the last 2 years. Today, as Adriana said, we are going to try to take you through how to close your books in the fastest possible time. This could mean 4 days back of your time each month. Before we kind of get into nitty-gritty, I'll introduce ourselves. Give us a little bit about the Beancounters first as well. So the Beancounters, we are a team of 6 here in Sydney. We really focus on system implementation and scoping. Looking at how businesses can install better tech processes and systems to make their day go faster. And that's across finance, HR, payroll, admin. We also look at process automation, so how the systems connect in the most optimal ways possible. And that could be as simple as a payroll journal or as detailed as, automated emails and reports out of systems getting sucked up into Power BI. And onto that, we often do quite a bit of Power BI reporting for some of our clients. And every now and then we do a little outsourced CFO for mid-sized clients with that kind of financial controller level, but want a bit of CFO help. My background was, I've been in public practice for about 10 years, started in Deloitte and KPMG in business services, and really found a niche for messy clients that were just on 20-day, 40-day, 50-day month-end reporting, that were just in that need to get their books sorted. And really started probably from the age of 21, starting to unpick businesses to make things simple. So how can you make accounting simple so a bookkeeper can do their job right? After about 7 years in public practice, I moved into financial controller roles in legal, recruitment, IT, design, and recently I've been doing quite a bit of retail and tech in the business. And my passion is really trying to make finance teams improve their value. So all the work we try to do is to try to move people up the value chain. Dan, I'll hand over to you to do an intro about yourself.
Yeah, so pretty similar to Tyler's background. I was in public practice for 4 years. Essentially, I was an external auditor at Deloitte. It's kind of where I cut my teeth, moved over to the commercial side of businesses, and again, kind of moved up the chain all the way through to like CFO and financial controller roles. I'm across various industries from construction, energy, FMCG, tech, and manufacturing being the last one. And as I've gone through my career, I've always kind of seen, what things have been done back in the day and how things have been transitioning, especially considering the new markets that we've got right now and the whole expression, there's an app for that. that's really coming, a really a widespread area in this kind of accounting and finance space. So I've seen all the painful parts of being an accountant, working through that whole month-end process, and I've also seen the light and the brighter side when you've really utilized that tech. So helping Tyler to essentially work with our clients to bring that light to them as well.
Nice. Okay. So one of the first things I'll get anyone to do is type in where they're attending from. Dan and I are here in Sydney. I'm actually lucky enough to be in Bondi, and I'm about to go down to the beach after this. And then I'm going to ask you guys the really hard question in a minute. Dan's in Ryde, Perth. We've got Gold Coast, Blacktown. Love it. Love it. Bit of Jervis Bay.
Hey, nice.
Nice. So today, one of the things we're going to really focus on is how to close the books really fast. Now, I've done $55 million businesses before Xero, before Wheel, before Employment Hero in under a day. I'm talking lunchtime, automated reporting, 60-page pack, clicked and sent out to 40 partners. Now, the way I got to this was, whenever I was in practice, I was always finishing just the last 10% of the books, right? Everyone's like, the big four firms, they give you the best training. They do, but they're only the last 10%. They're like, you're really looking at the tax provisions, you're looking at how the financial statements look. And I got into my first financial controller role of a 400 people business, 40 partners, and I quickly realized how little I knew. I didn't know enough about the accounts payable process. I didn't know enough about running a good debt collection process. And I was too focused on silly little things like GST mapping, how the books looked rather than being a true kind of accountant and finance leader. And so I got studying, and I managed to come across this guy named Stephen Bragg, who for about 20 years has been posting content on accounting best practices. And I'll be honest, it's probably the most dry podcast you will ever listen to in your life. But there are 10 episodes of accounting best practice where Stephen details point by point for hours on end how to close your books in a day. Now, Stephen has done this for listed companies in America. This photo of him is he and his wife in New Zealand. He's also written a book. You do not need to buy the book. If you want to, you can and support him. But like, if you listen to these 10 episodes, they're all on iOS or Google Play, you can implement this strategy within about 6 months. I've never failed to put this in under 6 months. And Dan, I think coming to you, what's been your average days it's taken to close your books in a business? What are you looking at?
So across the businesses that I've been, 50 mil to 300, 400, pushing a billion as well, revenue. Nothing has ever been better than 5 days.
Yeah.
5 days is probably, as good as it's going to get.
And I'll put it into the chat. Like, give me, if you guys can put in the chat, your best and worst close. I was going to do this as a poll, but like my best is day 1, right? My worst is day 20. I walked into an IT business and we had 20 days and it was only 30 million. Best is day 4. I'm going to tell you my favorite story. Best is, wow, 6 and 15. My goodness. Okay, so I'll tell you one of my favorite strategies that I ever heard of a listed business, AGL, where Dan and I used to work for, going from day 5 to day 3. They did nothing different. They did not one thing different. In the finance meeting, and Dan, this was just after you left to go become the treasury accountant at Lion, the CFO said, I want to close on day 3. And everyone was like, oh, but we're day 5, right? Within 3 months, we were day 3. And it was because everyone just backed their work up 2 days. And that's the fundamental concept, is a lot of accountants, when they come into a business, they're like, oh, we're day 7 because we start our month-end work on day 7. And that's the approach that we're going to try to unlearn today, which is about working throughout the month. So your month end close is just a click of a button. And I look at this as each month you have about 22 working days. If you spend 5 of those days looking backwards, you have 17 to do your job. Now, my goal has always been to get that as short as possible. Now, if you're a CFO on this call, your job should be to do absolutely nothing on month end. My goal was always to set month end up as fast as I could, but that usually took me about 18 months. Dan, how were you processed? Like when you were in your CFO roles, how involved were you in month end?
Got to the point where I was booking a journal. So that's the worst it's ever gone, was I had to essentially be there booking the journals, but absolutely, mirroring what you were saying, like we had to really push really hard to kind of start looking at that process, 2-3 weeks in advance.
Yeah. And that's the play. It's about when people rush, they make mistakes, right? So we try to work with our clients to do the process of do it once, do it right. So if someone does a fixed asset transaction, they put it to the right account, they register the fixed assets, they do the depreciation right, so it's ready for month end. And those little tricks can just absolutely speed up your month end. And especially if you're a CFO or a financial controller, those processes you can delegate to your team. So instead of you doing the work and complex journals at the end and figuring out what's wrong, you can work through effectively looking at the metrics of the business and then getting ready to discuss the answers with the board or the CEO or whatever. So, I'll put in a slide there. It's about the average is day 5. And it's true. Like, we're looking at these things. We've got best is day 5, worst is day 15. Alexander has said best was day 1 and worst was 14. And Susan Davies best is day 1. Fantastic. So day 5 is the average. And I've walked into so many businesses, and that's what accountants do. They spend 5 days. The most important thing I've ever done is worked through with my finance team and said, we are all doing month end on day 1, and we're finishing at 5 o'clock no matter what. So from that moment, everyone walks in. Yes, you still do your bank recs, you reconcile, you've got to chase your debts, whatever it is. But on that day, every single person from 9 a.m. to 5:30 p.m. is month end reporting and nothing else. And effectively, I consider myself like your coach of a football team in those days. You're like, hey, you're on this, make sure this is happening. You're on this, make sure this is happening. And Dan, what have you seen in your finance teams to make that kind of process go well?
Yeah, no, absolutely. Same kind of what you're mentioning there. It's the planning up front was the biggest thing, making it really clear and getting everyone kind of on the same page in terms of working backwards. A lot of people know how long their processes take. So the whole fact that if we can push hard and there's kind of guidance from the top that we're shutting down 5 p.m. workday 1, everyone's more than comfortable to work with their stakeholders, their necessary stakeholders, their partners to push their process to start slightly earlier. Excellent.
And there's a good question from Rob Halliday that just came through on the chat. And, Rob asked, for a multi-division business, how do you get your invoices and receipts in on time? And if I come back to Stephen Bragg's podcast, he does a whole single podcast on multi-division reporting and how to do that. So he talks about, do you centralize, do you decentralize, and what timeframes do you put on those people to get their books in as well? And then, he really talks heavily about single instance finance. So everyone needs to be on NetSuite or Xero or whatever it is. So what this slide is we're going to just do a quick high level of how to kind of do the fast close and what are those like must-have kind of processes to have throughout the month. So if I start with, and Dan, throw in any time on your experience here, but centralizing the accounting team. I came into a business that had finance in Sydney and Canberra and Melbourne. I reassigned my finance person in Canberra. I helped my person in Melbourne find a new job and centralized all in Sydney. And then that one play there probably saved me a day or two. Dan, have you ever come into that in a business?
So what's happened, not necessarily within one business, but there's definitely been areas where you had to deal with accounting teams in different time zones. With the international owners, there's some components where you can't really shift all of those or make all those changes. But it's all around that planning, that communication up front, that pushing them to get things a little bit earlier from them if you require information from them.
Excellent. And there was a question by Sarah Goodwin about stock takes completed to month end, and yeah, we've been in that process as well. Dan and I were working together on a coffee company recently, and we just did our stock takes the day before month end, right? And I accepted the 1 day variance. So what I always say to people about month end is month end does not have to be perfect. Month end needs to be about 90 to 95% right. Year end, that's the only time you need to be perfect. Yes, your BAS, GST, payroll tax, super, all your compliance needs to be bang on. But your accruals, sometimes like if I had about $30,000 of like rent plus overheads or whatever, I might just accrue $31,000. I might even put through that as a standing journal, because the amount of owners that have been like, that they care about $1,000 of expenses is zero. They care about revenue, gross profit percentages for me.
Just to expand a little bit on Sarah's point as well, what we've also kind of done when your business requires stock take is to do regular cycle counts. There's no requirement to do the full 100% stock take every month. You can definitely divide up your inventory profile to either certain sites or certain areas of sites or even certain shelves of sites, get the cycle count done frequently and regularly, and then you don't have to worry so much about that large, big one-off count, which you still need to do once a year, and that's probably going to be that times variance where you have to live with that 1 day variance. But frequent cycle counts is the way to go.
Mate, what's the worst stock take you did as an auditor?
I had to count iron rebars, so the reinforced bars that go in concrete. And if you know, they stack them up like in warehouses like 3 meters high, and I was counting the individual rebars going up to like 4 or 5 meters into the ceiling. So that was fun.
Not bad. I was a 22-year-old. It was May 31st, 2001. It was my girlfriend's birthday. And from 5 o'clock to 9 o'clock, I had to go out to Ravensdown Fertilizer and count fertilizer in a hazmat suit. That was pretty rough. So Sarah, we definitely know where you are coming from, and we try to say do that before month end, and then do it once correctly at the end of the year. So the other key point we're going to look at here is about just delivering financial statements, right? So on day one, you deliver a P&L and balance sheet by division, by city, whatever it is, but you do not throw in extra stuff. It is not about head counts. You can if you want, and you can do it quickly. You try not to throw in head counts. You try not to throw in sales data. Those are all supplementaries. So you keep your month-end pack tight. You close your books. We even lodged our GST at about 4 o'clock on day one as well. So like all the supplier invoices were done, closed, over. And then the other one, the most important thing that I see people missing is review the balance sheet. Me as a CFO, I review my balance sheet as hard as I review my bank. So I'm always looking into that, looking at my accounts, click, what on earth is that in the provision? Have you reversed this? Have you done that? Making sure that our balance sheet recs are absolutely clean. I think that's one of the most important processes. And Dan, what are you seeing in your time coming into businesses on balance sheet recs? What's the quality been like, and what have you done to get them right?
So quality is probably poor, is one way to kind of put it. Everyone kind of puts that on the back burner. They all focus so much on the P&L, and I'm talking for your monthly management reporting, right? So obviously year end is a little bit more structure, but what I see is people generally don't look at their balance sheet unless it's a quarter end. And what would happen is there's a lot of mess that gets left in there, which requires a lot of frantic follow-up and checking and changing when it comes close to those quarter end reporting. And what that causes is that quarter end blows out that month end to, that's where you get your 10-day, 14-day close, because they spent the first 6 clearing a balance sheet issue that was 2 months old.
Yeah, exactly. And there are two things I do as a CFO when I walk into a business. Number one is I install my cash flow, right? And that's day two. So day one, I'm shaking hands. How you doing? Nice to meet you. I'm Tyler. You know, it's lovely to be here. Let's have a coffee. Tell me about your role, etc. Day one is cash flow. So day one is meeting people. Day two, I install my cash flow. So I go through the bank. I put in my daily cash flow process. Day three, I start my balance sheet rec process. If you get cash flow and balance sheet rec, you can absolutely delegate 100% of your finance and never have to touch anything else again. If you want a copy of our stock standard cash flow and balance sheet templates, you can have them for free. I developed them when I was at KPMG. Dan and I developed a lot at AGL. We've got nice, simple templates. You can connect with us on LinkedIn and we'll send them over happily. The next one we'll move on to is billing. So shortening the billing process is the key. Now, I saw a $55 million law firm all bill on the end of the month. Now, what we've done with this is if you're a time and materials business, excellent, Wendy, you will get those templates. For a $55 million business, they billed on the last day of the month and let that time and billing go to the next. For other businesses, they've got like a 12 p.m. billing cutoff, right? So what that means is if you're a finance team, you're working on expenses and accruals and bank recs from 9 a.m. till 12 p.m. And then you cut your AR off at midday. So that's a really, really important play. And especially on the billing, if you can automate and do billing throughout the month, dear Lord, do billing throughout the month without doubt.
Yeah.
Dan, you got something exciting there?
Yeah, I had one of my prior businesses. We were doing billings on the second last day of the month, mainly because it was some system implementations that was set up prior to my arrival. And a lot of it, some of the complexity that comes as part of that is if you have if you have a business that has very strange revenue recognition rules, because that's tagged to the billings, sometimes you can't recognize that and have that hit the P&L until the billing cycle or the billing batches has been done. Recommendation to that is to look into that. All the current ERPs have tools and systems in place to allow you to recognize revenue or accrue for the revenue in advance prior to the actual physical billing to the physical billing process to be run. So definitely look into that. There's in the markets today that can definitely save a lot of the hassle and the problem that comes as part of that.
Yeah, and like, we look at the billing process. That is the one hurdle you've got to get across. So if billing sometimes can be out of your hand, but the most important one here is give one person in your team, in your finance team, or two people the responsibility. So that person, they have to maintain billing through the whole month. Usually they'll do collections as well, but that's the absolute key. Now, if you've got a billing issue, do not, whatever you do, if there is a billing issue on month end, close your eyes, right? Just billing issues happen throughout the month. You resolve them throughout the month. Do not wait till month end. I cannot express that enough, that is the right play. Excellent. Oh, so we've got Heather Smith, one of my favorite people. She's the first solution that offers the ability to reconcile the balance sheet in Xero. What's it called? RECHOUND, RecHound. Awesome. Yeah, cool. Love it. So if we move to expenses and production, one of the most important things there is about good automated systems. We're lucky enough in our business that we use Wheel, which just absolutely automates all of our expenditures. We're a $1.5 million business, right? And we've only got, most of our team are full-time, but we've got a few part-timers as well. And I do all our bookkeeping on my phone in about 3 minutes while I'm waiting for my coffee in the morning. And it's because we use Wheel, it's because we use bank rules, and it's because everything we do is as automated as it possibly can be. And if you've got a business that's $5 million, I'd be doing as many, and you're on Xero or anything with an app, I'd be doing as many of those daily processes as I can on the phone, and then really start hunting into the expenses kind of process about having a hard cutoff. I do not care for a $400 electricity invoice if it's in month 1 or month 2. I don't care. No one cares about a $400 invoice. Like, unless you're a $100,000 revenue business, you're probably not going to have a CFO or an accountant anyhow. So, like, don't worry about the timing of small invoices. If you've got an $80 gas bill, just pay it whenever it comes in, pop it into the books. Don't worry about doing an accrual, right? So just cut those things off really hard. If you want to do a standing or recurring journal, absolutely go for it. But like, do not get your accruals perfect until end of year. What have you seen in the big companies, Dan? What's gone well and poor there?
Pretty much that. So like I said, a lot of people, a lot of these big companies or companies that have scaled to large sizes started off a lot smaller, and that's probably reflective of a lot of the people on this call as well. They had processes to build it in, and it was having perfect accruals because they ran a particular report or they got a particular, statement from the supplier on like the day -1 or day 1. And they built a process around that to essentially get those accruals perfect. The issue is when the business scales and grows and the investment has been put into the finance team to help support that, they maintain that process. But couldn't be able to, but then they essentially maintained that process, kept that going all the way through to when the size of the business was too large, and they were just essentially unable to get those bookings things or to get the volume of work covered before that workday 1 close.
Yep. Yeah, that's exactly it. Now we've got a question from Harry Sani. It's about, what about a multi-property, multi-systems which are manually linked in a complex business with 40 business units? Right? Get on the same system. That's the answer. If you're not on the same system, you're never going to be able to close month end fast enough, right? So we're going to come to a slide in a minute about mapping your systems and like doing some work there for sure. So the other one I do as a CFO, I look at my percentages early. I'm looking at my salaries versus revenue. I'm looking at my gross profit to total expenses. I'm really hunting out my errors 6, 5, 4, 3 days out, right? So do not do that on day 1. Look at your percentages. I even start building graphs, right? For all our financial statements, we're building graphs. We're like, hey, your total revenue is profit, operating expenses, salaries, direct costs. Now, the last one here is about payroll. Now, payroll can be an absolute ease if you use great systems like Employment Hero. It can be incredibly hard if you look at really complex businesses with heavy timesheets and a lot of awards on bad systems. So, I used to work with one of my friends was Ernst & Young, the head payroll consultant. He always said, hey, if you can get to monthly payroll, do it. And if you can pay near the end of the month rather than the middle of the month, do it. Mm-hmm. Unfortunately, staff prefer weekly or fortnightly. Fortnightly is probably the easy answer. If you can do bi-monthly, that's actually quite a nice process as well. Now, this third point, accruals do not have to be perfect. So if you are doing accruals for month end for the books, and Dan and I did this for the coffee company, we just did best guess on 6 days and rounded figures. Instead of $21,402, we did $22,000. Give yourself a little fat, throw it in. And then the other one is do leave and wage accruals early. If you close your last payroll on the 26th, do your leave and wage accruals on the 26th. So your payroll is done. You never have to look at it. That's the play. And the point there about end-to-end responsibility is really important. Having one person managing payroll. Rob, you've made a good point about bi-monthly gets really challenging with leave accruals. Yes, it does. Monthly, fortnightly and weekly go a lot easier with leave accruals. You're right. Okay, so we're going to go into, I suppose, where to start, right? So the key thing is when you come into a business and they've got a bad month in, don't rush, right? Listen, understand the business, tidy up your own house first. Really try to play to what you know and what you can control in a nice, easy way. Dan, what do you do when you come into a new business, either as a consultant or a CFO?
I always say, yeah, exactly. Listen. I give myself a bit of I give myself 3 months to not change anything. If it's a large enough business, you'll need to go through a few rounds of month end to really feel out where all the quirks are, where all the issues are. You can question things, document things, keep it in the back of your mind. But you've got, I give myself a 3-month window to just be able to feel and learn, because you need to also earn the trust of the business, the stakeholders that are currently there, and the stakeholders who have been there and tenured as well.
Yeah, agreed. Once I'm established and I've done my 3 months, we had a goal in our team that we do 1 big improvement per month. That could be a business improvement or a finance or a tech improvement. And we do 1 little improvement per week, which could normally be a process, which means we do our billing emails better, or we've put in Stripe to add in our bills. So we've always set that up, and that 1 little improvement per week can be per team or per person as well. And then the last one here is about sharing the wins loud and clear. The biggest issue I see in finance teams is they do all this hard work and they do not tell anyone about it. So when it comes to pay rise time, everyone's like, what have you done? You know, are you deserving of a $50,000 rise? Do you deserve a $80,000 bonus? And if the answer is no, that means you probably haven't been vocal enough about the good work you've done. Dan, have you seen that in your time?
Yeah, all the time. And I think it's kind of inherent in, like, I don't know what to say, it's like the finance kind of mentality, in that, you know, getting rid of 3 or 4 manual journals that happen every month. That's kind of seen as BAU. People don't put that in their performance management plans. It's like, look, I've gotten rid of 5 manual journals. And yeah, on paper, it doesn't seem that impressive. But when you add the fact that the time savings you get from that, you can now apply to other value-add activities for actual stakeholders that are outside of finance. It's just doesn't happen enough. And, you know, if you're a CFO or if you're a finance manager who leads a team, I kind of implore you to, like, look at your performance management process and embed the whole idea of, let's get these small wins in those performance management, those performance reviews, and celebrate it at that point in time. It incentivizes your team, your more junior staff members, to really go hunt for these process changes and process improvements.
Yeah. And I buy coffee as my hack, right? We're called the Beancounters because Dan and I are probably both a bit addicted to coffee. But if anyone in my team does like a little improvement that, you know, I don't have to push them to, I buy them some coffee beans, or I walk to the coffee shop, get a coffee and put it on their desk. We only use not recyclable cups, we use reusable cups. Mm-hmm. The other one we look at a lot is mapping your system. And so I try to get a lot of finance people to map and draw their systems. And there are reasons for this. So we always do this when we come into an entity, and then we share it over and over again with junior, senior staff, because we're looking for the holes. We're looking for the manual data trend that is moving. So if there is manual data from the payroll system to the finance system, we're trying to automate that. And, you know, these are our 3 favorite at the moment. Like, if anyone says to me, are you a business under 100 million or under 1,000 staff, you almost have to convince me why you shouldn't be on Wheel, Xero, and Employment Hero. Now, I'm going to throw it out to the chat at the moment. What systems do your businesses use? Our business, we use Xero plus Wheel. We also use a bit of Airwallex because I quite like what they do for banking. And I find, Dan, like, I know you've done a few of these maps in the time. What do you, what benefit do you get of mapping this and then, you know, sharing it with the team?
Well, I find that it's getting it all on one page, having it really, like, evident with the visuals. It really helps stakeholders, people who aren't probably in the finance areas, or people who are isolated or kind of isolated or siloed in their particular areas in finance, to understand the big picture, to understand where the pain points are. It really helps someone in, you know, a decision maker to understand where the bottlenecks can possibly happen.
Yeah, exactly. And we're getting some good answers. Like, we're seeing people on MyOb Advanced, Employment Hero. Sarah, I can see you're on Fathom, which I love. Dan and I use Fathom all the time. There's an Approval Max in there, which is a pretty good system. Works pretty well for invoices. There's a bit of a Pro Spend, which is a competitor to Wheel. My God, you should look at changing to Wheel. Now, this one we're looking at here is effectively our quick snapshot. We're going to give 5 minutes on what we do when we come into a business. And Dan and I get these opportunities quite a lot to come in and go, okay, finance is either broken or about to break, or we're about to double in size. Please come in and help us set up the next process. And we always look about simplify, eradicate, automate, delegate, right? And now in these processes, we'll take you through these quite quickly, but the easy ones here, and Dan, throw anything I've missed, but like if I'm simplifying, you've got one email box for inboxes. I watch what the team does. We get the P&L reporting on a page, so we keep it nice and simple. We look at the budgets. So I don't care about a $49,786,000 budget. That's 49,000, right? Everything's high levels. What else do you see on if you're trying to simplify some finance there?
That's is that for the people to?
No, for you. Yeah, what do you see?
That's the point about the whole accruals are never perfect. That's the big one for me. Huge one, being able to make calls on a lot of, reoccurring expenses. That is, when you've got the history of the business behind you, you should be quite easily be able to do a lot of these ones at a high level. You don't have to have your utilities and expenses accrued to the dollar. Round them up, look at historical averages, true them up every quarter, double check them when you get closer to year end. That's the biggest savings that you can make in terms of time with your finance team. Yeah,
I like that. We've got it really. I'm just going to come back to the system stat. We've got a guy person named Sorchin Quinn on NetSuite, Wheel, Employment Hero, and Airwallex. That's pretty good. It's a big system with a Wheel integration. I like that.
Yeah.
Okay. The next one we're looking about is eradicating. Now, this is my specialty. I consider myself a lazy accountant. Sometimes I just do not send a report. So I come into a business, you've got to send this report to this person every week. If I ask them what they want it for and they can't tell me, I just don't send it the next week and just see what happens. And then if they chase me, I'm like, cool, answer my question now. That one's a big process. Now, if you can get your journals down to 2 at the end of the month, you're doing very good. So this comes to doing it right and doing it once. So if I look at my journals, I'm only doing an overhead allocation journal and a tax journal. Dan, are there any others you have it as a must-have at month end? And this is after month end, so you can do your accruals prior.
After month end, that's pretty much it. I generally try not to touch anything more. That can't be managed by the actual system if you want to get there. That's
where I am too. And then the other one is the CFO or financial controller is all deliveries come through you. So anything that goes out to the wider business, you need to see them before they go out, because the reason you do this is so your team doesn't have to do silly things. This can come to like expenses. If someone's like, please send me a report on all the entertainment. I want to see that and I want to see if I can automate that. Now, the last one here is about challenging everything. As soon as I come into a business, I challenge every single possible thing that can cost me time, because I don't like going home at 9 o'clock, but sometimes it happens. All right. Now, this one is where Wheel, Employment Hero, Xero shine, and it's great to see the systems that people are using, but it's about hunting down manual processes and just killing them. Like if something can be automated, do it. If it costs $50, do it. If it costs $100, do it. If it costs $350, do it. Anything that can be automated, do. And Dan, why don't you talk through some of the Fathom consolidations you've done lately and how much time you think you're saving there?
Yeah, so a business that we've recently worked with had about 20 separate entities, and there was consolidations essentially and eliminations that had to be done between pretty much every permutation and combination of those 20. They have done those eliminations manually via Excel, as probably a lot of you guys have seen as well. We were able to utilize the Fathom system and the functionalities of Fathom to be able to suck up all the live Xero data, review utilizing the system's features to be able to spit out a real clean report, to be able to analyze where the eliminations are, whether the journals have been booked correctly or incorrectly. And outside of probably a day's worth of work in terms of setting up the chart of accounts and the elimination rules, it now means that as long as the journals get done correctly, and you set up your finance teams with rules around those, it is a one click of a button, and there's the fully eliminated balance sheet and P&L is ready on day one.
So we've probably gone from about a 4-day, maybe 3-day consolidation in Excel to a 10-minute click of a button, because we did a bit of the work. There's a fourth point there that's really important about buy systems that connect. So be really smart about buying a payroll system that connects to a finance system. That one is absolutely critical. And do the research, like sniff test, touch the systems, buy them. Like the moment I touched Wheel and I saw that they did automatic follow-ups for our team members and for our clients, so our finance leaders didn't have to do the follow-ups, I was like, that's a game changer, because Wheel brings through the supplier name, brings through the amount, brings through the GST, and then you can also say always code Adobe to subscriptions. All those automations are just unbelievable. They save you so much time. And also it improves your relationships between yourself and your finance people, your non-finance people. And then the last one is delegate. So the key thing here is about asking your team what they're good at, right? So if you want to have fast month-end close, you have to play to strengths. Do not try to minimize weaknesses. Ask people what their ideal day works like, their ideal work day looks like. Are they a 90% churn or are they a 50% churn? My ideal day is about 30% and then 70% other. We've got people in our team that they want to be 100% churn the whole day, right? That's their comfortable space. And so we use that, we utilize it, and then we try to make it as an efficient answer for them, or efficient day for them. And then the last, go.
Delegation is not just delegation within your finance team. It's all about sometimes you can get some of that workload pushed out to your business, which is why something like Wheel is such an amazing tool. Because I remember back in the days when C-suite executives with their Amex cards would do all their expenditure, come with a stack of receipts and dump it on their PA's desk. And then the PA 3 days before month end is crying to the finance team because she had to essentially go through every single one of those manually scrunched up receipts, try to map it to the Amex statement that comes on work day 2. She's got essentially 1 day to essentially code everything into the system before pushing it onto the finance team. Wheel essentially has this slick system that you can essentially delegate that coding work to the people doing the work. And if you've got salespeople who, the last thing they want to do is code a receipt for the coffee that they had with a client, you want to make that as seamless as possible. You want to essentially give them the path of least resistance to get the work done and get the admin done. Because unfortunately, that's the reality of this, is that we're going to need that information from them. People are going to be having coffees and lunches and spend and have business expenses that need to be coded. So it's best to kind of delegate out to the guys as well.
Indeed. We have come up to our time, people. Thank you. Thanks for everyone that shared some information. This is our favorite topic. If anyone wants to reach out to us on LinkedIn, you can click on that and we will share as much information, because we can hopefully save you some days. If we can do it for free, we will. If it's a big project and you want to pay us, you're more than welcome.
Otherwise, just buy them a coffee. It seems like that's the way to their hearts.
That is the way.
That was excellent, guys. Thank you so much. I can see many compliments coming through. As I said in the prior session, if you love a bit of words of praise and appreciation, go get your monthly boost over there, Tyler and Daniel. So thank you so much, everyone. I won't keep up any more of your time, because I don't think I can even compete with the wisdom that was just shared. So again, Tyler, Daniel, thank you so much for sharing your insight there. And I encourage you guys, add them on LinkedIn. They share some great things as well. Have a chat. Accost Tyler at Bondi, whatever takes your fancy.
Yeah.
All right. Bye, everyone. And
thanks, guys.
bye, Heather. I can see you in there as well. Have a good night, all.
Yes, thanks. Bye.